G'day, Professor Joseph Drew. I'm talking about one of the most important topics in local government finance. What is the capacity of your residents to pay local government rates or taxes? In this video, I'll talk about how to measure it properly, and no, it's not the way people are measuring it at present. I will also talk about the two main ways to mitigate capacity to pay problems. Now, obviously, this is important for every local government because you've all got to set rates and you all want to set rates that people can afford. But it's particularly important for councils in New South Wales and Victoria where you have to demonstrate capacity to pay in order to get a special rate variation. Well, it's quite simple. We're not measuring capacity to pay properly, and that has huge implications for your community. It's a bad thing. It means that people are being put under unnecessary stress. So the typical way that capacity to pay is measured is to look at the average tax rate for each different type of assessment and to compare it to some councils that you think are similar. And usually your local government regulator will have some sort of classification system. In New South Wales, it's ALG 5s and the like, and that's where you make the comparisons. But if you've ever looked at those classification systems, you know that the councils that make up those classes are comprised of extremely different demographics. So the methodology is very flawed. There's no point comparing the average rates in a economically depressed demographic and comparing that to the average rates in quite an affluent demographic. It just makes no sense. Also, looking at average rates is not a good indication. Why? Well, depending how you use base rates and minimum rates, depending how many subcategories you have, an average rate won't actually tell you much. It won't tell you anything about the underlying distributive justice. There's a much better way to measure this. And the correct way to measure capacity to pay is to do something that's called econometrics. Now, I'm an econometrician. My first degree was mathematics, and I did a master's in accounting and PhD in economics. And this is my trade. Now, econometrics essentially looks at trying to establish a formula for capacity to pay based on all the local governments in your jurisdiction and going back several years. There's no point looking at 1 year. Maybe that was an atypical year. We need to go back many, many years so that we're not getting atypical results, skewing and biasing our results. So we do this super complicated maths and we come up for a formula for capacity to pay. I then insert the particular characteristics of your local government area, those demographic characteristics, the number of different assessment types, and the number of people on various welfare benefits, and typical wage earner income and typical unincorporated business income. I insert those actual characteristics for your particular council, and I'll get, as a result, an answer that tells me the capacity to pay. Of course, the assumption is that everyone else within the state are indeed able to pay their rates on a regular basis. This is the most precise way to do it. This is the only way to know for certain that your community can afford the total tax take. But that gives us the total tax take. It doesn't tell us anything about the distribution of taxes. Now, if you're considering to going to a consultant to get capacity to pay work done, to get an SRV work done, make sure they can do econometrics. Now, personally, I wouldn't allow anyone to do econometrics that hadn't at least done a master's level major in econometrics. Econometrics is extremely sophisticated maths. It's not something you learn in an undergraduate degree to a level of sophistication that is necessary to give you the answers. It's very easy to mess up econometrics and to get spurious answers. And if you're going to do that, you might as well use the dodgy ratios. And indeed, if you're going to do either of those things, get a dartboard and throw some darts and take a guess and giggle, because that's about all you're achieving. So if you're getting this work done, get it done by a true expert, someone with econometric experience, someone that can prove they've got econometric experience, preferably with scholarly publications, because we know that goes through a really rigorous review process, and if you can't do econometrics, there's no way in the world you'll ever get a paper published on it. Okay, so you've worked out your total tax take. Now we need to mitigate capacity to pay problems within your community and your total tax take. Okay, and that all comes back to understanding why the local government tax system is the way it is, understanding the implications of having things like base rates and minimum rates and subcategories, understanding why and if there should be differences between the categories. Now, this is a huge field of endeavour in itself. Local government taxation is something I published on in the best journals in the world, and on top of, please make sure whoever's helping you understands local government taxation theory, understands the tax assignment literature, understands concepts such as distributive justice. So if, as is likely, your current rate system doesn't have a high degree of distributive justice involved in it, which is the typical case in Australia because they've evolved over many years and they've stretched further and further away from a just outcome over tens, hundreds of years. If you haven't reviewed that and ensured that you've got distributive justice, what we can often find is that we can ensure that there's sufficient capacity by by first making sure that the tax system is up to the task and it is a just tax system based on tax theory principles. So that is the starting place. And indeed, we're often really worried about the most vulnerable people, the people with the lowest capacity to pay. And if you get the tax system changes right, if you're guided by a true expert, what you'll find is that you can avoid putting any, sometimes no, additional pressure on those vulnerable group entirely. You can ensure that the people who have the greatest capacity are in fact the ones that take on most of the burden. So it's a matter of knowing what you're doing, which is the case with all the empirical works associated with SRVs and anything to do with local government. And this is why we have problems time after time after time. State governments and councils get misled into going to accounting firms and commercial consulting firms who simply don't have these empirical tools. You know, I'm not blowing my own trumpet, but I'm one of the best in the world, widely regarded as one of the best of the world. That's why I'm an adjunct to 3 universities abroad. You're not going to usually find those sorts of skills in an accounting firm or commercial consulting firm. So the next step in ensuring that people do have sufficient capacity to pay is to have a really carefully thought out hardship policy. I don't think enough local governments put enough effort and thought into having it carefully constructed. It must be targeted. I can't overemphasize how important it is to target our hardship policy. Now, not just in local government, but all levels of government. We tend not to be targeted when we give welfare-like relief to people. So, for instance, take the pensioner discounts that apply in most states for local government taxes. Now, many pensioners desperately need those discounts, appreciate it, and it's very important that we give them to them. But likewise, I'm sure you know that many pensioners have significant resources to draw upon, are still working and getting some income, and may not even quite realise how important this discount is and how other taxpayers in the local government area have to sacrifice in order for them to get that discount. Now, by delving deeply into the ABS data, we can pretty closely identify the groups that are most likely to need hardship assistance. But it's absolutely essential that we do so, that we get the rate structure correct in the first place. And in that process, we will also identify the kinds of people most likely to need hardship assistance. The next step is to write a carefully constructed policy to ensure that that assistance is meeting need, but also only goes to people that actually do need it. And part of that will be to ensure that the community knows that they can request assistance and they will receive assistance if they request it. That assistance comes at the cost of everyone else in the community, and that they therefore have a reciprocal obligation to the community to only ask for assistance when they need it. And to understand also that we must be targeted in who we provide relief for. So I hope that was helpful for you. I hope you understand now that there's a big difference between what you usually see in most SRV applications, a couple dodgy ratios, of little value and absolutely no comparative value at all, and absolutely no information at all, value at all, and the sophisticated sort of stuff that an expert, a true expert, can actually do for you. And this is a huge decision for your community. You need to make sure you get it right. If you don't, people will suffer. So I strongly advise you go and get an expert involved. Thank you very much for your time. If you know someone that can be helped by this video, please send it to them and help me help others. Thank you. Goodbye.